In 2022, the global stock market experienced a substantial pullback on the back of the decades-high inflation and extremely aggressive tightening by the world's major central banks, led by the US Federal Reserve. According to JP Morgan, the global economy is projected to expand at a sluggish pace of around 1.6% in 2023 as financial conditions tighten. And the winter aggravates China's COVID policy and Europe's natural gas problems persist. Global head of equity Marco Research at JP Morgan, Dubravkov Lakos-Bujas, said in the first half of 2023, JP Morgan expects the S&P 500 to retest the lows of 2022 as the Fed over-tightens into weaker fundamentals. This sell-off, combined with disinflation, rising unemployment, and declining corporate sentiment, should be enough for the Fed to start signaling a pivot, pushing the S&P 500 to 4,200 by year-end of 2023. According to the Bank of America, the global economy and markets were rattled by two significant shocks in 2022, which were an inflation shock and an interest rate shock. The bank said that ongoing into 2023, one expected shock remains, which is the recession. Amid this backdrop, Bank of America Global Research economists and strategists released their outlook for 2023, noting the year should be a story of two halves. The US, Euro area, and the UK are all expected to see recessions next year, and the rest of the world should continue to weaken, with China a notable exception. The recession shock likely means corporate earnings and economic growth will continue under pressure in the first half of the year, while at the same time China's reopening offers a reprieve for certain assets.
Right now, Kalkine is offering a 7-day free trial on its premium research reports. Get access to data-driven market insights combined with an in-depth analysis on financial markets across the globe. Don't miss it. Subscribe for the free trial now.
Meanwhile, the turbulence of 2022 weighs heavily on Morgan Stanley's investment outlook for 2023, with implications ranging from economic growth, inflation, central bank policy and interest rates to credit quality, earnings, valuations, investor sentiment and other key metrics. On the other side, Goldman Sachs expects global growth of just 1.8% in 2023 as US resilience contrasts with a European recession and a bumpy reopening in China. To keep growth below potential amidst stronger real income growth, Goldman Sachs expects the Fed to hike another 125 basis points to a peak of 5 to 5.25%. Meanwhile, Goldman Sachs does not expect cuts in 2023. So what do you think? You can comment below, you can like and subscribe to our channel and press the bell icon for video notifications. I'm Rachel for Kalkine Media.